Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very good day of trading today. And in today's action, guys, well, we were talking about the possibility of volatility and a pullback. And the pullback we definitely got early this morning. At one point, the markets were down in terms of the SPY almost 1%, and the Qs were down almost 1.25% before the bulls had some very nice buy the dip action in the early afternoon. Now, we were talking about the price action, guys, how an extended rally was just maybe looking for a short-term retest before possible further expansion. You saw that on the SPY. You also saw that on the QQQs coming down perfectly into the designated support level that I've been talking about pretty much all week. In terms of the news, we did not really get much in terms of new tariff news, new geopolitical news, or new macro news whatsoever. The focus was really on Walmart earnings, which gave slightly less better than expected guidance than they were supposed to. But all in all, that is the biggest narrative that the market was able to find today to reason for the drop. If you ask me, it was really just a question of normal push and pull price action in the markets. And all things considered, I do still think that everything remains slightly healthy. So in today's video, guys, we're going to go through a few things together. Number one, we're going to be going over 4 different earnings that I have prepared for you guys. Number 1 is going to be Walmart. Number 2 is going to be AliBaba. Number 3 is going to be Square. And number 4 is going to be Booking Holdings. Not going to do Mercado Libre. Possibly I will cover them in Monday's video upcoming for the next week. But just to be, consistent with our time management here, I'm going to cover those earnings and go over them relatively briefly. Just get the gist of things out there and my stance on the companies. Now, thereafter, we're going to go through our major technical analysis rundown of our major market indexes, see how that rotation is doing amongst the market, even though we had a bit of a red day today. And thereafter, guys, we're going to take a look at our big tech names and see amongst all of the big tech names that I regularly cover on the channel, which ones still represent the best buying opportunities in my opinion. So it should be a very fun video, guys. Let us dive right into the action. So to start it off, the SPY was down about 0.42%. The QQQs equally down 0.42%, but financials were some of the loss leaders of the day. We know that financials have been one of the lead bulls in the market and were potentially due for a little bit of a pullback, and a pullback we definitely did get. Take a look at some of the banks. JP Morgan down 4.5%. The credit card companies also down. All in all, though, you can see some rotation in various sectors. Rotation into the healthcare sector, rotation into the bottom half of the market, real estate, utilities, energy getting a little bit of love. Consumer defensives were down because of Walmart earnings, pulling down Costco as well, but the majority of the sector, taking a look at the other names, were actually doing quite fine. So even though you might see some big red names on this heat map, it's important to notice that there still is some market rotation into different sectors, and also within certain sectors of the market, you can also find rotations coming in and out of certain names. Right now, you see that most of all the SaaS plays are down, but Microsoft was actually up. Apple was up, Amazon, Tesla were down, Google and Meta struggling a little bit. And in terms of the semiconductor names, it was a fairly mixed market. So not only are we seeing, sector rotation amongst different sectors, within those sectors, we are starting to see some push and pull action amongst some of our biggest and smaller names. So all in all, guys, a little bit of a shaky market over the course of the day, but it is at the end of the day, our first day of meaningful pullback all week. So key importance is going to be focusing on the support levels that we're coming into and determining which stocks amongst all of these companies are representing the best value for possible swing trades over the course of maybe the next 1, 2, and even 3 weeks. So the heat map not looking too bad, but you can see a lot of push and pull, right? Taking a look at the one-day relative performance, half of the market was up, the bottom half of the market more specifically, but the ones that were down in a more substantial way, namely financials and consumer defensives after those Walmart earnings. But all in all, the market still does remain relatively balanced. Take a look at the 1 week relative. Today's price action did not really impact the direction of the markets in the last 1 week of trade. We still have far more sectors that were up than down, and even financials, which had one of their worst days in recent memory, they are still net green when measured on a 1 week relative basis. So all in all, I would not say the markets are too poor. We did not lose any major structure in terms of daily uptrends, not even close to losing any structure in terms of weekly uptrends either on the SPY and QQQ. So as I've been saying, the markets still remain a bit cautious, but you have to just keep your eye on the rotation and focus on the companies that are down rather than chasing the ones that have had substantial gains here in the last few weeks. So hopefully that makes sense. Before we get into more technical analysis though, let us dive in to our company earnings, shall we? And we're going to start off with the big one, which is going to be, of course, Walmart. So Walmart over the course of the day, guys, was down a very, very, very rare 6.5%. But is it because the business is faltering or is it because the consumer is getting excessively weak? No, the context matters a lot, right? Walmart has ran an absolute ton in the last year of trading. The stock has roughly been up over 80%. What we're seeing right now is Walmart coming up to be kind of like the NVIDIA effect. They are the own victim of their prior success. They were expanding operating margins and net margins extremely beautiful in this location. And now that the guidance for margins is going to be coming down a little bit for 2025, well, of course, you cannot consistently generate those outsized returns to the upside if you're not meeting all aspects of your guidance. It is the NVIDIA effect in a nutshell, guys. When you put in a beautiful year, it's very tough for a year-over-year comparison to keep pumping up those record numbers overall. But if I had to just pretty much dumb the earnings down, they really were not bad as the stock price warrants, right? It's just a question of the stock has run an absolute ton and now is due potentially for a little bit of extended consolidation on this monthly time frame. You can see it's been nothing but up. Now some consolidation is most likely warranted. But when you take a look at the numbers and the guidance, it really wasn't that bad. Take a look at the earnings, once again beating on EPS and being on revenue a little bit by about 0.27%. So let us take a look at the article and see what the media is saying about this. Walmart shares drop as retailer says profit growth will slow. Notice they're not saying it is going negative, but it will be slowing year over year because 2024 for Walmart was indeed a record year. So the profit growth will slow this fiscal year, even as sales continue to climb. Walmart said holiday quarter revenue rose about 4%, which is standard for the business, and e-commerce sales shot up 20% in the US. They've been doing a fantastic job of growing the e-commerce division of their business. In the year ahead, Walmart said it expects net sales to grow 3% to 4% and operating income to increase between 3.5% to 5.5% on a constant currency basis. Giving you context once again, for the just completed year of 2024, they had posted adjusted operating income growth of 9.7%. So obviously when you go from operating income growth of 9.7 down to the company's historical average in the last 4, 5, 7 years of 3.5 to 5.5, you're seeing a normalization effect. So that is why the company cannot just continue to skyrocket up and to the right. Now, the company also said it expects full year adjusted earnings of EPS 250 to 260, which is down from the expectation of 2.76 that Wall Street was anticipating. Once again, that those marginal diminishing returns in terms of operating efficiency are starting to catch up with the EPS expectations as well. Those two things combined resulted in the stock price being down about 6.5%. It makes perfect logical sense when you think about it. The CFO, however, says that consumer spending patterns are steady and that there's not any sharp changes that they've seen. Arguably, guys, this is the most important thing of the entire earnings call. When asked about the health of the consumer, Walmart still says that yes, the consumer is still being picky about their spending. However, are they noticing any degrading of consumer health or consumer spending patterns? No, they're roughly in line with what they've been for the last 9, 12 to 15 months. Moving on forward, talking about tariffs, we've lived in a tariff environment for the last 7 or 8 years, and we'll do what we know how to do. We will work with suppliers, we'll lean into our private brand, and we'll shift supply when necessary to try to take advantage of lower costs that we can then pass on to consumers. Walmart has been here before, guys. They're a very experienced business. They're veterans of the game. I would not be too worried about them in terms of tariffs or whatnot. Most of their production anyways is based in the United States. Now take a look at their same store sales, 4.6%. You can see it's down from a very high level of 2024. This was the reason that the stock moonshotted since the late 2023 period. Now we're coming back into a more normalized version of same store sales, which should oscillate always between about 4 to 5%. So this post-pandemic boom is now coming back down to a normalization curve, which additionally puts a little bit of pressure on the stock price to the downside, as now most of that boom in terms of growth of revenue and operating margin profits is now coming back into, as I said, normalization territory. The highlight, though, has to be the e-commerce sales. 11th straight quarter of double-digit gains in terms of e-commerce sales, 20% for the quarter. And in terms of US sales, global e-commerce sales rose 16%. That is absolutely fantastic. They've been pumping out decent gains on their e-commerce brand. And overall, guys, it is a higher margin portion of the business other than their usual in-store shopping. So talking about that e-commerce division, by the way, Walmart was saying these are all higher margin, faster growing parts of our business where the math is just suggesting that our margins are going up over time. And frankly, I do not see an end to this, said the Walmart CFO. Faster and more frequent deliveries have helped Walmart's e-commerce business become more profitable. Over 30% of Walmart's customers who have had an item delivered from a store have paid an extra fee to have that order delivered within a few hours. On Christmas Eve, 77% of orders were express deliveries. Those faster deliveries, which are made in less than 2 hours, cost an additional $10. So Walmart really starting to milk their e-commerce business, which is a higher margin business, helping keep up overall operating margins and net margins, but still, as we see a return to normalization, the stock price as well will see a return to normalization. So do I see any red flags for the business? No, but this is just a company that, I mean, take a look at the historical price average, right, guys? Usually Walmart hugs the 12 EMA on the monthly. It doesn't really pull that much forward, and you do not usually see the stock at an 80 plus RSI for months and months and months on end. The last time the stock had such an exponential rally, you have to go all the way back here, guys, to 1998. So you can see how much of an exceptional move this was indeed on Walmart. And if I had to guess, guys, I would say that most likely the exponential move is probably over. And can it be, can it be possible that we see a little bit of consolidation as Walmart grows in to its new valuation, grows into its normalization of same-store sales and operating margins? Absolutely. If you ask me where I would like to buy the company, probably like around $80, $70. I know it sounds cheap, guys, but we are way too overblown. Like, this is not Palantir, right? At the end of the day, it is Walmart. Still bolstering very high or very decent, rather, revenue growth and EPS growth. There is nothing wrong with this company, guys. This is one of the best companies in the entire market, right? Take a look at the EPS expansion curve. It is constant up and to the right. Take a look at the revenue expansion curve, constant up and to the right. So I see no problems with the company other than the fact that now the prior year comparable numbers are starting to catch up with them at $95 where they sit right now. They're currently running a forward price to earnings for 2025 of about 35, which is a little bit higher than historically for Walmart. Walmart usually trades between a 25 to 30, so you're not really getting the best deal on the stock right now. The PEG ratio is also quite high at 3.15%, even though they're a very solid and predictable company. This is admittedly a little bit too high, even factoring in the EPS growth. And taking a look at the free cash flow yield, not the best, guys. 2.4%. Usually you want to see these when they're in buy territory between 2.5 to 5%. For Walmart, you really want to try to buy it when the free cash flow yield is in the 3%, 3.5% range. And that's only going to happen. They can only increase free cash flow so fast, guys, right? While the stock price increases. What you'll need to see for this free cash yield to increase, you need to see a decrease in the stock price, because free cash flow, how you calculate it, it's trailing 12 months free cash flow divided by the market cap. So it stands to argue that if the market cap keeps going up faster than they're able to print free cash flow, this number is not going to get much better, right? So you need the stock to pull back. And as I said, very solid for long-term business. If I had long-term shares that I'd be holding for the next 10 to 15 years, there's no reason to sell right now. But would I be buying anything either for a swing trade or even a long-term position trade? No. At this point in time, it's ran too far. I really need to see a retest of the 12 EMA, which for me stays around that $80 mark. So that is everything that we had to cover for Walmart earnings. Hopefully you guys enjoyed that. Now let's dive into another one. That's one I spent a bit more time on because of how much it moved, right? And how unusual the 6.5% one was down. Now let's cover a stock that also has seen tremendous gains in the last few months, which is AliBaba. AliBaba has been an absolute tear. First monthly uptrend, guys, in the last 4 years. So it has to be notable to us what is happening with Baba. Is it a fluke? Are people just bidding this one up even though the fundamentals are bad? No, the fundamentals are improving and improving and improving. They had a fantastic earnings season. The reason that they're only up 8% and pulled back a little bit, well, I mean, guys, the stock is up how much in the last, month since January? 70%. So it stands to argue a lot of that earnings bullishness is kind of already priced in, but they were up 8% after those earnings today. Daily and weekly charts remain a little bit overbought. Beat on EPS by almost 10% and beat on revenue by about 0.6. Let us dive into a little bit of those Alibaba earnings for you guys, all right? Shall we? So moving into Baba, Baba shares pop 8% after the cloud unit and e-commerce growth push up the quarterly profits. Alibaba makes a tremendous amount of money, guys, and has a tremendous amount of money on the balance sheet. The fundamental valuation of this company still remains very, very cheap. But we know the risks. The risk is that they're associated with the China trade, and the Chinese economy, let's be honest, has not been doing too well over the past 4 years, arguably still in a recession. So take a look at these net income numbers. We know they beat on revenue. We know they beat on EPS. Take a look at this. Net income, guys, 17% net margins. And Baba, in the most recent few quarters and years, has been struggling to maintain those profit margins as they saw a decrease after COVID. You can see they traditionally, before COVID, had net margins of about 20 to mid 20% range. They got crushed, and now they're coming back the last 3 quarters. You can see margins are now coming back to what they once were prior to the pandemic. So very nice to see these net margins here on the right-hand side, 17, 18, and now back this most recent quarter to about 17% net margins. This quarter's results demonstrated substantial progress in our user-first AI-driven strategies and re-accelerated growth in our core business, talking about the e-commerce and their fintech arm, which of course is Alipay. If you guys have never been to China, everybody uses Alipay for absolutely everything, guys. Very, very large fintech company, but nobody ever talks about it. They either talk about the e-commerce division or the cloud division. Now, keep in mind, guys, in terms of their status, in terms of cloud, right? Alibaba is not the biggest player, but they are number 4 by pure market share, 4% of the entire market of cloud infrastructure share. So they're looking to continuously expand that. Our cloud revenue growth reignited to double digits at 13% per year, with AI-related product revenue achieving triple-digit growth for the 6th consecutive quarter. That is absolutely outstanding. So Alibaba is starting to push and push and push forward for more and more of that cloud market share, especially in the Asia markets. Looking ahead, revenue growth at Cloud Intelligence Group, driven by AI, will continue to accelerate. Tech in focus. The retail giant's tech activities are being closely watched by investors after the announcement of the Chinese company's partnership with Apple to roll out AI features for iPhones sold in Chinese. Very big partnership for them. The AI era presents a clear and massive demand for infrastructure. We will aggressively invest in AI infrastructure, really echoing exactly what big tech in North America has been saying over the last few quarters. Our planned investment in cloud and AI infrastructure over the next 3 years is set to exceed what we have spent over the past decade. It just goes to show you guys how much demand there is for Alibaba's cloud infrastructure services. Are they also spending a ton of money just to build a chatbot? No, and that's what I said with big tech, guys. They're all these companies, yes, they're building large language models, but that is a fraction of the compute power that they're using for those purposes, guys. The rest of it all is for data storage and optimization purposes for all the clients that want to do business with them, have their data hosted by them, have their data optimized, filtered, and everything you can possibly do to make a company's data more efficient and, give feedback on that data to these companies, right? Data analytics is kind of like the new gold of the modern day era, right? Moving on, sales. Alibaba's key business units, Taobao and Tmall Group, that is within the Asia segments, posted an annual 5% uptick in revenue, mostly having to do with their e-commerce groups, right? The international e-commerce group, which oversees businesses such as Lazard and AliExpress, added 32% year over year, period, on the back of strong performance of cross-border businesses. So you can see that their e-commerce businesses, both within China and internationally, are finally starting to round the bottom, and the cloud business continues to remain a very strong point for Alibaba, all things considered. Now, taking a look at this, guys, right? Taobao and small businesses, that was a 9% year-over-year growth. Cloud revenue growth accelerated to double digits at 13% year-over-year. AI-related cloud product growth, triple digits for the 6th consecutive quarter overall, guys. But what we wanted to show you here, right, is a few key things, right? The net cash position of Alibaba is absolutely ridiculous, guys. $52 billion. This company is worth $300 billion right now, and they have 1/6 of their entire market cap in cash. That is absolutely outstanding. And look here, look at these outstanding shares, continuously dropping their share count as they continuously do, guys. This is US dollars. Yeah, this first line here, US dollar buybacks, always about almost $2 billion or more per quarter. If I had to derive an average, I'd say the average right now is about $2.3, $2.4 billion per quarter. Their share buybacks, look at this, shares outstanding, yeah, from 2014 through 2024, you saw the uptick. Now, since the pandemic, they've been using all of that cash, all that free cash flow to aggressively, very aggressively buy back shares, which is also going to do wonders for that EPS growth. So all in all, guys, AliBaba, solid company. My favorite play in China overall. Revenue growth and EPS growth for the next few years, very solid. They still have $15 billion of buybacks remaining, but keep in mind, they have $51 billion in cash. Yes, they will be spending that on cloud infrastructure, but they can drive still a lot of it to even more and more and more buybacks. At 135, even though the company's up almost 80% in the last month, are they still a good deal? Look at their forward price to earnings. 14. When you divide that by their EPS growth rate, you get a PEG ratio of 1. And at a free cash flow yield of 5%, this company is still a very solid deal in the market if you want to be taking a risk on the China names. We saw their profitability was continuously increasing, very strong cash position, strong free cash flow yields, EPS up and to the right for the next 4 years, and revenue up and to the right for the next 4 years. I see no red flags with this company other than it being tied into the China recession narrative and people not wanting to bid. Michael Burry has been very heavy on these companies, and I'm pretty sure he's been making a lot of money recently. So overall, is this stock a buy for me? Yes. Wait for the pullback, though. If you can get a pullback down here, let's call it 130. We're almost there. 130 down to about 120. This little pocket, look, this is the actual breakout retest, yeah? This is the final level of closer than not resistance. It is now going to be acting as support. The 200 weekly moving average is right down here as well. We are now clearly above all of the weekly moving averages. And look at the monthly chart, guys, finally getting some monthly expansion. So if we wanted to position for possibly the next 2-3 years as the Chinese markets recover overall, I do not think there is possibly a better name than Baba. However, we must be patient. Obviously, it's not as good as a deal as back here. Are we ever going to revisit these lows, guys? I don't know, and I probably don't think so at this point. So anywhere between 130 to 100, or 130 to 110, I will be looking to possibly add some swing trade positions. And if we're going for call options, it is going to be leaps, possibly even January 2027, because we know it's not going to be a smooth path. It might be a bumpy path because they get lumped up with the China trade overall. But this company, if you take this company and put it in a bubble, the numbers are absolutely fantastic. And that is the moral of the story for AliBaba. Hopefully you guys enjoyed those earnings as well. Now, moving into company number 3, we're going to be taking a look right now at Square. So Square has been relatively struggling, right? But it's not just Square. Square has had a tremendous rally here over the past, quarter, let's call it October to December, and then kind of has fallen off, right? What have you seen the same thing happen to other fintech companies? You saw the same thing happen with PayPal roughly around the same time, and you saw the same thing happen with SOFI as well, to where they kind of peaked right there in November, and now have been roughly sideways or slightly down ever since. So I would not say it's a Square problem. It's just the rotation into the fintech companies is not happening at the same pace that it was all the way back there. That being said, no excuse for Square this quarter. Square did miss on their earnings. Miss on EPS by the expectation by 19%. That is not a small miss. They had a few one-time line expense items that did contribute to this miss on EPS. If you were to remove those one-line items, they would have only missed by about 5-6%. But a miss is a miss. Got to call it how you see it, right? Revenue also down by about 4.17 versus the estimate. So not able to drive as much revenue to the bottom line as they wanted to. I say bottom line because a lot of Square's revenue is in terms of gross. And then they pretty much, in terms of the number of features that they have versus the revenue, I'll explain a little bit more. So moving into Square, into their analysis, guys, just never forget, right? What is Square essentially? They are a 4-in-1 solution. They have an application like PayPal's Venmo, which is the Cash App platform. They have something like Affirm, which is their buy now, pay later, when they acquired a company called Afterpay just about a year and a half ago for about $30 billion. They also have something like SOFI, where they offer banking, trading, and loans. And then they have the B2C, business to customer business, which is the Square app client terminal, in competition right now with companies like Toast and with companies like Clover as well. Those are the payment terminals and payment interfaces. When you have a small or medium business, you walk into a store, you tap your card on the little white Square terminals. That is Square's business to consumer platform, essentially, right? So they're a very well-rounded company with a lot of possible upside verticals in their different segments. Now let's take a look at the earnings results. Block shares fall on profit and revenue miss, as we just described. Revenue increased only 4.5% from a year earlier. So quarter over quarter was not the best quarter for Square in Q4, but overall the revenues per year are increasing at a fairly decent clip. If you guys want to see, they're increasing revenue at about a double-digit rate of 10% for the next 3 years. It's just Q4 to Q4 was not the strongest one for Square. Now, they posted a $2.31 billion gross profit, 14% increase from a year ago. So these are still increasing profitability as this company continues to scale higher. If you notice, Square has never had the best net margins, but they are coming into scalability, right? They are barely profitable. But when you take a look at something that I always like to show, which is your gross margins, the gross margins are not terrible. They are increasing gross margins over time. And as they continuously scale revenue, more and more of that money will be eventually brought to the bottom line. It's just, scaling the company costs a lot of money right now. And that's why they're not able to bring a tremendous amount to the bottom line right now. But nice to see that their gross profit, which you want to see them expand, is expanding well. But they are facing competition from Toast and Clover, which is run by Fiserv. Now, gross payment volume came in. This is arguably one of the best metrics. GPV, this is why I say GPV and revenue are not the same, right? This is just total payment volume that goes through the platform. This is good. It means more people are using the platform overall on a quarter-to-quarter basis. So although Square did miss on their portion of the revenue, at least more people are using the platform. That is very good. 61.95 versus the estimate of 61.3. Square said it expects to, I refuse to call this company Block, by the way. Square said it expects to deliver gross profit this year of 15%, which is roughly what they did last year. So that is very good. And they expect to have operating margins of about 21%, which is also very good, better than last year. Their payments business has expanded beyond traditional point-of-sale transactions to include lending and financial services. That's what I was talking about. They are now a kind of 4-in-1 solution as a company, and instead of just being this company that they were for a very long time. Yeah. So moving on further. This week, Afterpay on the Cash App card begins rolling out. Afterpay is their buy now, pay later service. They're looking to include that in the Cash App platform overall. They're trying to make really the Cash App platform and the Square app overall a kind of one app fits all for anything finance, whether it's banking, loans, credit card applications, buy now, pay later, peer-to-peer transfer systems, everything like that, right? So really a digital bank is what they're trying to become. And then, of course, they have their whole commerce side of the business as well, which does help. The CFO said that the product launch aims to provide customers with more credit options and positions Cash App as a banking alternative for some customers, which is exactly what I just said. Analysts see lending as a key driver of future monetization, with some pointing to additional revenue opportunities in merchant services, their business-to-consumer brand, and advertising within the Cash App platform as well. The unit recorded $1.38 billion in gross profit, 16% year-over-year increase, and above the analysts' expectations. So very nice to see that their acquisition of Afterpay is working as planned. They're able to integrate it and push it out to consumers, and consumers have been using it. Jack Dorsey, the founder, also articulated the long-term vision of integrating Cash App and Square into a single financial ecosystem, reducing the need for users to rely on multiple apps. So if you are a business and you're using the Square merchant terminals and payment systems, well, possibly if you're the business, you can do all of your finances, whether it's loans or banking or everything like that, within the platform. Very good to be able to integrate that for small and medium businesses, because if not, you guys know how complex it is to run a small business, right? When you have revenues and expenses, you have to tally that in one software. Then whenever you want loans, you have to apply to traditional banks. It would be fun if you're a small or medium business owner to have everything in one single platform. That is what Square is trying to do. There will be significant reason to use Cash App and not have to go to the App Store for 10 different apps. Everything is in one app, and that will be the Cash App. Very fun. This year is going to be one of unexpected upside in the business, said Jack Dorsey, and one that we significantly changed the market dynamics on because of just how well our system works and how configurable it is. So the company is repositioning and trying to integrate all of these solutions. This is Square's pivot from back here to now what they are today. So obviously this integration and pivot takes a long time to play out, but we're starting to see the fruits of that labor as they continuously focus on cost control, and as they scale, try to drive more money to the bottom line. Now, is this a very good company to invest in? I like giving them a chance. I do have some Square call options myself for 2026. We made a lot of money on them since August and September. You can see the debt profile is not too bad, although they do not have that much free cash flow. They have a lot of cash on the balance sheet, so I would not say their balance sheet is terrible. They're bringing in some free cash flow the last couple of quarters, and their cash is more than their debt. So I would not say debt and the financial position is a problem for them. Take a look at EPS as well. EPS is up and to the right, and arguably Square should be coming into some of their best years ahead, which is why I do really like this company into the next 4 years. I think they're a much better, well-rounded company than some of their competition, such as PayPal, let's say, right? Moving into the revenue is also up and to the right for the next 4 years. So I really see no problem taking a bet on this company at these current levels. Matter of fact, the price is decently cheap at $77 in the after hours because the company after those earnings was down about 6 to 8%, back down to the $77 mark, which is right around, let's put a line right about there, right? 77, 75 bucks. So you guys will see that, right? Is it a good buy? Well, take a look here. The forward price to earnings, guys, is only a 17. That is extremely cheap for this company. Gives them a PEG ratio when you factor in price to earnings versus the EPS growth, which is very high, 23% for the next 4 years on an average basis. The PEG ratio is a cool 0.74. Anything under 1 is cheap. Between 1 and 2 is okay, over 2 is expensive. This has to be still one of the cheapest tech companies in the entire market. The reason Wall Street is not allowing them to expand is because they're still scaling and integrating all the components of their business, even though they've been doing fine. And price to sales, guys, 1.75 price to sales. For a fintech company, that is dirt cheap, which is one of the reasons I do like Square here, guys. Even on the technicals are looking good. Monthly, looking for the higher lows, possibly going for the expansion, right? The chart is now looking not too bad, monthly uptrend for some expansion, but it could be a little bit bumpy. But I think 2025 and 2026 could be the breakout years for Square to really start recapturing some of the levels. My price targets for Square by the end of the year sit roughly between $100 and $120. So there could be some very decent upside on this company, which had really good earnings overall, guys. I mean, you take a look at their earnings profile, right? Look at the Cash App platform. Cash App platform is really starting to gain some momentum in terms of sales growth, growth at profitability as well. You can see they're increasing their EBITDA margins. They've reduced their net losses over time. Now they're posting net profits, very good. Growth in profitability as well. You look at all of these, whether on a quarterly basis or on a yearly basis, and everything is decently going up and to the right. So there's really nothing bad to say about this platform overall, guys. They're doing what they set forth to do when they started pivoting the business roughly about, 3 years ago at this point. And I think they have a very good management team in place. Cash App inflows for active user, that is also going higher. So as you can see, there's more and more people on the platform, and more people are using the platform with more and more money. So very decent acquisition, or very decent client acquisition and client retention there as well. Total inflows on Cash App. Look, I mean, the inflows are going higher as well, despite the fact that the card actives, right, are not increasing that much. The amount that people are using the platform is good. So the net retention remains very high overall. And every single year, they continue to add more and more members. And the older members by cohort are being retained on the platform. That is what you want to see. There's not much churn, right? And take a look at this. 2.5 million people depositing their paychecks. 6 million monthly actives, and 5 million Cash App Borrow monthly actives for their buy now, pay later service. All in all, I do think this company is a buy. It could be a little bit bumpy, but at this valuation, I'm definitely willing to give this company a chance. And that is everything for our Square earnings. And now, last but not least, let's have a look at Booking Holdings, shall we? So, pulling up Booking, BKNG, let's go have a look. So Booking Holdings coming in with their earnings today, and the stock was actually up roughly about 4 or 5% in the after hours, doing very well, guys. Booking Holdings has been on an absolute monster of a rally, essentially since the pandemic ended and travel boom started accelerating once again. This is a company that's benefiting from a secular trend over the last 3-4 years, especially with the younger generations. People are now no longer focused on buying things, they want to buy experiences, and Booking Holdings is capitalizing on that secular trend. That being said, in terms of their earnings, Guys, they absolutely crushed it. Once again, absolutely crushed it. EPS beat by 15%. Nobody was expecting that. And a revenue beat by 5.61%. That is very, very good, guys. For a company of Booking Holdings' size to be able to still beat revenue and EPS by such wide margins, extremely strong quarter for them. Let me just close some of these tabs off, guys, if you will be so kind as to wait for me. Okay, so Booking Holdings, look at this, guys. Up 14% year over year on revenue, earnings per share 23% gain, gross bookings, because they are an aggregator, right? They're a wholesaler of travel packages, flights, hotels, and whatnot. So the gross booking numbers is not their revenue. The revenue is just how much of a cut they get from the gross bookings, yeah? 10% increase in gross bookings, $166 billion on the platform, and adjusted EBITDA 17% increase as well. Fantastic, fantastic across the board here on their earnings, guys. Gross bookings total beat on the expectations. Gross bookings from their agency divisions, third-party sales, beat. From the merchant platform, their own platform, another beat here, 24.2 versus 22.8. Look, they beat on everything. Room nights, 261 versus 249, beat. Airline tickets, 14 versus 12.36, beat again. Rental car days, 17 million versus the 17.98. That is a slight miss, then again, but still year over year, that is still a yearly over year increase of about 6 to 7% when you dive into their earnings platform, their earnings slides here, which I did go over, guys. I give you guys the summary, but trust me, I'm doing all of them, right? Now, moving in further, the revenue, the agency business, right? 1.86 versus the 1.94 billion average estimate. That was 9.9% down. So third party is not the best. However, that's good for Booking Holdings. They make less money from the agency side of their business than they do from the merchant side of their business, their own platform, yeah? So merchant, the one that really matters for the company, 3.34 billion versus 2.9. That's a 35.1% change year over year. Fantastic, fantastic, fantastic. And yes, they also make some revenue from advertising and other promoting, different advertisements on the platform. 271 versus 256, guys. They crushed it all across the board on the segments that mattered the most: hotels, flights, room nights, merchant, which is arguably more important than agency. It's a larger segment of the business. They crushed it on absolutely everything, guys. Really, really love to see it. And they have been implementing AI in terms of giving you personalized recommendations. The CEO on the earnings call said that they're very bullish on the implementation of AI so far and henceforth on the company, and that they will be optimizing it further. Personalized recommendations, automated customer service, pricing and availability insights, guys, right? It's going to learn what you like as a customer depending on your profile and start promoting things for you, right? If you're the type of person that only likes going to certain parts of a country or a certain continent or whatnot, it'll always promote those types of things for you. These travel aggregators have already been doing that in the past, but now they're doing it with a heightened level of efficiency, right? More transparency for pricing and availability, more focus on a loyalty program as well. Alternative accommodations has been doing very well, right? An array of lodging choices, accommodating different budgets and experiences, from budget-friendly hostels to luxury villas, depending on your search history with the company. So they have been using a lot of AI really to get a better sense of what the individual customer wants and tailor the experience to them. That is obviously going to improve efficiency for the company and drive not only customer retention and loyalty, but also increase conversions, right? Because what the company wants is when you go onto the website, they don't want you to leave and go check other travel aggregators to compare prices, right? They want to keep you there. And Booking.com, you guys might not know a lot about it because most people in North America, they use Expedia a lot. Expedia is the most used platform in North America, but everywhere else, trust me, Latin America, if you go there, if you go to Europe, if you go to Asia, especially, right, the Booking.com has a number of different names. Like I'm in Asia right now, right? The most popular website here to find hotels and deals is Agoda, and Agoda is owned by Booking Holdings, right? You can use Expedia, but the best possible pricing and the most wide array of hotels on the platform is with Booking.com. They have the largest markets in the whole world in my humble experience with Booking.com. Take a look at the free cash flow by quarter. Super strong free cash flow, right? Bit of a dip, but you can see it's the same revenue profile. Great Q1's their best quarter, and then they kind of fall off the rest of the year. Look at this trailing 12 months, guys, smashing the EPS in relation to last quarter as well, continuously deriving capital returns. So keeping on doing those buybacks, capital returns by quarter. You can see they do pay dividends, but look at this diluted share count decline every single quarter, guys, which gives you a total shares outstanding curve of this. They started buying back heavy 2018-19, paused in COVID for obvious reasons, right? You got to preserve your cash when there's a pandemic, have resumed buybacks, and now look, continuous decline of shares outstanding, which really does wonders in improving EPS. All in all, guys, Booking absolutely crushed it. Their net margins are very good as well. This company, if you want to take a look at their financial profile, very solid company. Margins were crushed. We are now back to pre-COVID margins, which were about 32%. They're coming back up there now, guys. Look, these most recent quarters, they're back up in the 30% range. Business back to usual, back on the right track. Taking a look at their financials, you will see that debt is not really a problem for them. They bring in a tremendous amount of free cash flow per year and per quarter. Sure, they had to take on a little bit more debt during COVID just to make sure that the business was shored up, but they will start progressively paying down that debt as free cash flow is now back to normal. So the balance sheet, although it's not an A-plus balance sheet, I wouldn't say there's anything wrong with the balance sheet per se. Very decent financial position in terms of EPS expansion. Look at this, guys. They should be having some very good years in the future as people benefit, or as the company benefits from secular trends of people wanting more experiences than just buying more material things, and the revenue back to growing standard up and to the right. Overall, fantastic company. Revenue growth here of 8% per year for the next few years. EPS growth of 15% for the next few years. Very strong here, guys. At about $5,000. Well, now they're higher, but I did it at $5,000. 5,000 bucks, you're running a P ratio of about 24.11. That's roughly in line with what the SPY is, right? A little bit more rich than the SPY, but not crazy in my opinion. And when we do the PEG ratio, right, divide the PE by their EPS growth rate, you get a PEG ratio of 1.61. Not the worst for a very solid company, guys. So can we have further upside even with a 4.7% free cash flow yield, which is on the higher end of what you look for, right? Between 2.5 to 5, closer to 5, the better the deal essentially when measured with this more value-oriented metric. I think this company still remains a buy, even at these levels, even at the all-time highs, in my opinion, guys. I think this company probably the next 3, 4, 5 years is going to be doing very well. Expedia should be doing well. Airbnb should be doing well. But Booking.com is arguably the best travel aggregator and travel operator in the entire world. Their platform is just a lot wider than their competition. And contrary to something like Airbnb, they just offer a more wide range of services, right? Flights, even vacation rentals by the owners as well, such as Airbnb. Booking has a similar offering on their platform too. They have cars. They just have a more wide range of offerings, right? Very solid company. But if we're looking for an entry, I mean, a nibble here around the all-time highs, sure, but really you want to be looking for these monthly consolidation phases in the company. All in all, though, the technicals are looking beautiful. If we do a little bit of a retest down here and tighten up the range, I'd be a bigger fan of buying it around the $5K to about $4,800 range. But even buying it up here for a longer-term swing would not be the worst idea, even though it's pulled up a lot. My desired area is like 4,800, as I've been saying. Would I be opposed to adding some up here, though? No, not really. If you have a long enough time horizon, I think this company should be doing very well over the next few years. And that is everything for our earnings recap, right? So that was a lot, but I haven't done earnings for you guys in a while. Now let's dive into the technicals, and we're going to be going over these quickly. No biggest gainers and losers of the day. We did all those the rest of the week, but now we have to cover some earnings, yeah? So let's dive into the technical analysis, and we, of course, are going to start off with the SPY. Let me just put it on the daily chart, and let's get going, shall we? So if we take a look at the SPY here, classic price action as we've been describing in the last few days, right? Daily uptrend is very strong. The bull's looking for a higher low for possibly the trend expansion to be underway. We will see what happens on the Friday session, but overall the week is looking like a very decent close. Weekly uptrend is now confirmed on the SPY. If you close the week like this, it will indeed be a new breakout of the all-time highs, a new weekly leg higher, and I'm not seeing any red flags whatsoever. Keep in mind, if we have some more pullbacks on the Friday session, what are we looking for here, guys? Anything above 600, roughly 599, 600, looking for a daily higher low for possible further trend continuation. I see no red flags whatsoever. The bulls remain in full control. The Qs largely the same. Beautiful daily uptrend right now. Break above our resistance range, which we've been struggling with, for arguably the last 2 months. Now we are back above it, and now we're going to use that area as support as the bulls did early this morning when the markets had a heck of a tumble, reacting nicely from our 12 EMA, tapped into our support zone, which is roughly 532 down to 526. The bulls do look poised for some possible continuous expansion back to new all-time highs. So we'll keep an eye out for that. The weekly uptrend is looking gorgeous. Still a confirmed weekly uptrend, looking for that continued trend expansion. The big catalyst for next week, of course, is going to be NVIDIA earnings. And NVIDIA earnings, if they smash it out of the park, guys, I really think that that is going to be the extension leg. And then maybe after we extend for a week or two, then you might get a more accentuated pullback to the downside, as we constantly see, right? These big moves up, extension, then bit of a pullback, big extension, bit of a pullback. You're not so far away from the 12 EMA just yet, so we can see some further expansion. But if you get too high here, running to the 550, 560 range, that's when you really need to take profit. This is the take profit area, because you might just be looking for a possible higher low thereafter on the weekly time frame for continued upside. So that's just my impressions of how the next 1 or 2 weeks of trading might just possibly happen if the bulls are able to maintain this price action structure, which they are. Moving into financials right now. Financials, big dip on the day, but have we lost any structure? No, still maintaining the range highs. Yeah, so this is the previous all-time highs, resistance, now back as support. You see the bulls have tested this area quite a few times and tested it again today. Tested the 12 EMA, have not lost the daily uptrend just yet. They're trying their best to break out. However, if we lose this area without setting a new all-time high, as you guys can see, that would be a daily confirmed downtrend. Would that be the worst thing? No, we have been anticipating this possibility now for a few weeks in a row. The bulls have had a tremendous rally since the start of the year. If we pull back in any meaningful way on the daily time frame, like a daily downtrend, something like this, yeah? What are we looking for here, guys? Quite simply looking for a weekly higher low for possible further trend continuation. So even if we consolidate, I do not think it's the worst thing in mind. Anything above $47 is just going to be looking for that higher low for possible further upside trend continuation. So although financials were down, it's very tough for me to still buy them up here, guys. JP Morgan's still a little bit too extended. Would like to find them around 255, 250 on JP Morgan. Bank of America also still a little bit extended. At Bank of America, 44 down to about 42 bucks is my sweet spot. These banks have run a ton, guys. You need to let them consolidate a little bit for the breakout retest trade and then the run. Bank of America, 42.40. Visa and MasterCard, they've ran a lot. This is the monthly time frames, yeah? Need to see some consolidation. I will not be buying Visa and MasterCard up here, even though I have them in my long-term portfolio. I'm not in the business of buying things at highs, guys. I need the pullbacks. For MasterCard, for a quick example, right? MasterCard need to see something like a 540 retest. That would just be weekly price action. Breakout, retest, and possibly run. That would be the next swing trade area. And even something like American Express, even though they are looking decent, like the retest zone on AXP right now on the weekly looks fine, yeah? But this one is kind of like a Walmart. Look at the monthly, guys. It's just way, 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 way too extended. AXP does not usually move like this. And when it does, you can see some periods where it comes down into a 1 or 2 month period of consolidation. For me, AXP is a buy under 300. Let's call it 280 to about 275. That would be the real area where I do want to buy these. So that's just a quick little synopsis of the, or quick little summary rather, of the financial sector overall and the drop they had today. Now moving into XLV. So XLV, now we got the daily engulfing move. Yes, we're coming into resistance above us, 148 down to about 146. Not looking too bad though. What was the context? Daily downtrend. When you see a daily downtrend, zoom out to the weekly. What are the bulls looking to do, guys? Looking to set the weekly higher lows. After a huge engulfing move, looking to set the higher lows, respecting the moving averages right there, and now possibly looking for the weekly uptrend expansion. This is one of two things. You can either say it's a cup and handle, and I would agree for the breakout. You can also argue that it's possibly an inverse head and shoulders, and I would agree as well. Both of those patterns have very high probabilities of some follow through on this. So that is the likely scenario, in my opinion, moving into the next few weeks of trade. We'll see what happens, but the bulls are looking very good. Recapturing, if they get rejected here, might just be setting a higher low and then maybe two-step the process if they cannot just blast off right away, right? So it is looking fairly decent as a sector overall. Moving into SMH right now. So SMH was only up about 0.18%. Not the worst day for semiconductors, but we know they're trying to fill the gap from DeepSeek. Not quite doing it just yet, but we also know it's just been trapped, guys, for the last 6 months. Trapped between two levels. Trapped between resistance, which is 260 down to 250, and below support, which is 232 down to 220. So in the event the bulls are not able to break through right away, we would just be looking for a higher low. Daily uptrend into this range is nice. We'd just be looking for a higher low at this point. Anything above 245, let's call it, looking for a higher low, and maybe have to two-step the process to really get some lift on this index as a whole. I think this one's probably going to be waiting for NVIDIA earnings next week to truly blast off. The one trade that's available right now, guys, wait for the breakout, retest possible of support. That will be a heck of a retest, guys. You're talking like, 6 months of resistance. You break it big to the upside with NVIDIA, get the retest and run. That would be a very juicy entry opportunity for a trade, in my humble opinion. One of the names that was fired off in my Discord today as a trade opportunity was TSM. TSM, beautiful, beautiful, beautiful short puts opportunities, 190 down to about 185. Pretty much called it at the low of the day, guys, all the way down here. This is the start of the 11 a.m. candle. 10:45 to 11 is right here. And I mean, we called it in the Discord. I call it in the Discord right here. Let me just move on down to the trade idea setup, right? Or high conviction trade setups. Calling it 10:57 in the morning, pretty much 185s or 190s. Some of the members were able to take that, and now they're already up, guys, a very decent amount. So that was one trade that I really like. As I said, I'll be focusing on the best companies in this sector, the ones most exposed to data center ramps. So TSM for me, 190 to 185. I like TSM, I like Broadcom, I like NVIDIA. More recently, I've been playing a lot of NVIDIA and a lot of TSM because Broadcom is a little bit still too extended for me, but I really, really, really like this setup on TSM, guys. How many times does TSM test the 26 moving average in the last few years of rally? Not that many, right? So if they come down into it, decent buying opportunity. And if you look at this one on the monthly chart, it looks very attractive. Just looking for a monthly higher low for further trend continuation, which is why if you pull back 185, right, is the sweet spot for possibly a monthly higher low for possible further trend continuation into 2025. The guidance for this company in 2025 is excessively strong. Still, they just cannot keep up with it. Moving into the Russell right now, well, obviously when the markets are struggling and financials is a big component of the Russell's just not going to move. This one is just landlocked pretty much, just doing a whole lot of nothing. No clear short-term trend structure, constantly getting rejected by resistance 232 down to about 225. I keep saying it, guys. The weekly provides the best, the best clarity on this chart overall. One thing, there's two types of trades. Either you're going for the breakout, retest and run. This retest area, high probability trade, the stop would go below here, then you target the all-time high expansion. But I'm not in the business here, guys, of longing right now into resistance. I want the bulls to prove it to me. Can we get the breakout? Only if we get the breakout, okay, they'll claim the level, and then we could talk about possibly expansion of the weekly. Or the flip side is a complete crush back into support, and then we bid into support down here, roughly 215 down to about 200. So the whole time that one of those two trades is not being freed up, I am not interested in taking the Russell, guys. It's just very choppy right now, no clear direction. And lastly, the Dow Jones coming down because the financial components of the Dow were all down in a big way today. That being said, although it looks like a daily downtrend, guys, we still have not closed below the lows, right? 44,000 roughly, this area right here, have not closed below the lows. This is still, technically speaking, a bull flag. However, if the weakness maintains into tomorrow and we do start flushing below 44, that would indeed be a confirmed daily downtrend. You'd be looking for a little bit more downside. And when you zoom out, guys, on the weekly, what are the bulls looking to do? It was a weekly downtrend, beautiful sweeping engulfing move. The bulls at this point are just looking for a weekly higher low to reset the weekly uptrend after having lost it in December. This is the extended procedure required to reset those weekly uptrends. So are there any red flags in the market whatsoever? No, we are just seeing rotation. We are seeing the bulls pull back and try to set weekly levels of higher lows. All in all major sectors of the market are still looking quite bullish. Some are leading, some are lagging a little bit behind, but one thing's for sure, I do not see any major red flags in this market overall. Now let's dive into some of our big tech names because yields haven't really moved. They still move to the downside and crypto is still doing a whole lot of nothing. So you just refer to my previous videos, guys. Really have not broken any levels. Let's dive into Apple and our big tech names, and then we're pretty much done for today's video. Okay, so Apple up about 0.4% on the day. Not too bad of a day for Apple, continuously grinding a little bit higher. The context is still this very beautiful daily uptrend. If you want to know when the daily uptrend is almost finished, just take a look at the hourly, guys. If you start losing the hourly levels, let me just put it on the regular trading hours, extended skews it a little bit, you can see there's no loss of the hourly trend and no loss of the 12 EMA. If you see those two things happen at the same time, hourly downtrend and loss of the moving averages, you know the daily move higher is finished, and the bulls will be seeking to set a new daily higher low. At this point, anything above 227, looking for a daily higher low for possible further trend continuation. So if we're looking for a swing trade on Apple, it would have to be here, 237 down about 232, retest of support, which was prior resistance for the bulls for a very long time. In this whole period right there, get a retest of that region. The trade is as follows. The retest, the entry is in this level. The stop loss goes below here. And then you are targeting the all-time highs for the expansion. It's about a 2-to-1 risk to reward trade. Not the worst on Apple, but it's tough for me to commit a lot of size for that trade because of how high and how rich the company is trading right now. We went over their earnings. Their earnings were okay, but still lacking a lot of that flagship product. The iPhone growth is just not getting the amount of sales that it once was. Still waiting for that massive refresh cycle for iPhone devices, which so far just has not been happening, even with the rollout of Apple Intelligence. The valuation at 244, 245 right now is still relatively high, which is why when we're looking for swing trades on companies that trade at rich valuations, it's very tough to commit a lot of size. But could I do maybe some call debit spreads right here? Sure, I wouldn't be opposed to doing it at all. The company, though, is not looking too bad. The weekly is expanding nicely, and the monthly, well, Apple really has not lost the monthly uptrend, right? It was always just looking for a new monthly higher low, which they got, and possible monthly trend continuation. Next stop for Apple, of course, is going to be the all-time highs, roughly around the 260 mark. If everything goes smoothly, I think they'll be able to get it maybe over the next 30 to 60 days. Moving on to AMD right now. AMD down about 0.45% today. Not the worst day for AMD, but then again, the bulls are just moving very, 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 very slow here, guys. As I was saying in the previous videos, guys, AMD is always like, it stairs up, elevator down. It's been that way, guys, for the last how many months? A lot, right? We know the context is still a big monthly downtrend. The weekly context has also been a sweeping weekly downtrend as well. And overall, the bulls have not even reset the daily uptrend. You need to set the daily higher lows. Give me a daily uptrend. Start attacking this resistance of 120 up to about $130. And only then we can talk about the possibility of recapturing the weekly uptrend and starting to put in a little bit of a monthly recapturing move as well, right? So slowly but surely, AMD is trying its best to curl. That being said, there is a trade opportunity here. If we retest these lows down here, 110, 108, in search of those higher lows for a trend expansion, I am a big fan of playing short puts, the wheel strategy under the market, and I'll be looking for strikes $100 down to about $98. I think the valuation of the company there is very decent for the expansion that they're looking to do in their data center business. So all things considered, it is a good play for a good risk to reward profile. But notice I did not say there's no risk. There is some risk, but if we're factoring in fair value for AMD right now at about 140, 145, I think there's some good profits to be made here. The downside risk is down to about 98 from here. The upside profit is maybe 140 to 150 in the medium term, talking about the next 2 to 3 months. The valuation is very cheap down here, 0.57. At 114, it must be like 0.6, 0.65. Not the worst, expanding revenue and EPS very nicely and expanding gross margins as well. So keep that in mind for AMD. Moving on to Amazon. Amazon down today as well, 1.65%. Now, Amazon has been one that since earnings has been taking a little bit of a bath, but that is perfectly fine, guys. Yes, it is a daily downtrend, but in the grand scheme of things, what are the bulls looking to do? On the weekly, which provides more clarity, we are just looking for a weekly higher low for possible further trend continuation. I love writing short puts, guys. 215 down to 210 is my sweet spot. You'll notice that Amazon has very rarely lost this 26 EMA the entire time it's been moving higher for the last 2 years of trade. So I love writing short puts in that position. I would not mind buying more shares. Their earnings were fantastic. AWS was doing fantastic. And Amazon's been doing something that they've never done before. They're focusing on net margins, focusing on EPS expansion, focusing on free cash flow generation as well. They used to be a top line growth company at all costs. They're now shifting to shareholder returns, which is going to be very attractive in the coming years. And even on the monthly, guys, what are we looking for here? Looking for a monthly higher low for possible further trend continuation. I think Amazon can be very poised to hit maybe 250, 260 this year. So I definitely want to be buying any and all dips in that 220 to 215 range, even down below here, guys. Even here at 220, not the worst to add. But if you want the real support level, it starts coming in about 215, right? So keep that in mind. Moving on to Google right now. Google's still flat, but trying to curl. You can see what Google is trying to do right now. They're forming a base of support right above our area, which is about 181 to about 175. I keep talking about this area as one of my favorite trades right now for short puts. Short puts in this area, guys, lower 180s to 175, I think is a very easy and relatively risk-averse trade for me right now. Talking about valuation at the 190s is already extremely good. So in the 180s, about 5% lower, it's even better. You're talking about like a 1.35 peg. That is an outstanding valuation for a company with 27.5% net margins in the recent quarter, 30% year-over-year free cash flow growth, and record amounts of free cash flow. This company is sitting very pretty in terms of its financial position and growth outlook as well. That being said, daily need to start seeing some daily engulfing moves. If we start breaking above 188, that would now be a confirmed new daily uptrend. We will seek to break through this overhead resistance, which stops at 193. If you can clear that, the bulls will be well under their way to resetting the higher high, higher low patterns, and well on their way to maybe start recapturing a little bit of this weekly move to the downside. The clearest time frame for Google, though, is the monthly. Look at this monthly chart. Gorgeous monthly trend expansion, looking for a monthly higher low for further trend continuation. So that being said, if you do pull back here, 180 to 175, it's confluence. Not only is it horizontal support, but it's also the confluence with the monthly 12 EMA, and Google has been kissing this 12 EMA a few times, and always in the most recent 2 years, it has been a very decent buying opportunity. So I remain very bullish on Google, still one of my favorite plays, guys, for all of 2025. I do think that Google is very poised this year to at least clip into the 220 to 230 range. And I do believe as well that that is the median analyst price target, if I'm not mistaken. Yeah, it is. The average price target is about 220 all the way up to about 250. So keep that in mind for Google. Moving on to Meta right now. So Meta continues to pull back after its ridiculous rally the last 3 weeks. But all good things come to an end, guys, right? Daily RSI was a lot very overbought. The weekly RSI was also in overbought conditions, and it was just too far extended from the 12 EMA. So what we're looking for here now, the clearest time frame, because the daily could eventually result in a daily higher low, or lower high and lower low, daily downtrend. In other words, if you get the daily downtrend, you guys know what the bulls are doing here. They're going for the weekly higher lows. And I like this level here, the 12 EMA around 650 to about 630. I'm not saying it's going to get there, but if it does get there, could be a decent swing opportunity for some possible longs. So be a little bit patient on Meta. It's ran a ton the last 6-7 weeks. Looking for the higher lows, and the higher lows is going to be an area where if I do see a trade, I will let you guys know. But right now, I'm not looking to buy the dips right away. I think it's still a little bit too early, especially after that monstrous rally. And even if you get some weekly consolidation, guys, they'll be doing two things at once. Not only weekly consolidation, but maybe even monthly consolidation to start off the month of March as well. If you do come back here into maybe the 640 to 630, that will be a much more manageable entry, looking for monthly higher lows for continuation thereafter. Fantastic company, fantastic margins, fantastic scaling of their advertising business. Nothing bad to say, guys. It's just up here at the higher, 600s, almost 700. The valuation is a little bit rich, which is why I want to be buying it on more of a dip. Moving on to Microsoft right now. Microsoft still starting to come alive. They hit about 419 today. Nice space created off the lows. After earnings, daily downtrend, nice engulfing move, right? This is a 100% engulfing move of the most recent leg of selling. They eventually will be looking to set the higher lows and go for the daily trend expansion and start attacking the overhead resistance 425 to 430. The whole time they were down here, I was saying what a beautiful opportunity it was to buy Microsoft just in shares or maybe call options, leap call options with a lot of time. That being said, support below us still remains very strong, guys. This level is super strong, right? Roughly 405 down about 390. They have not lost it in a full year of trading, which is why Microsoft remains, even now at 415, a buy in my opportunity, not only for a swing trade, but also for a long-term portfolio. Fantastic companies. It's just the bulls may need to take a little bit more time to reset that daily structure and also reclaim some of the weekly structure that they've lost here over the last few months. It may take some time, but I think that Microsoft has a very good chance of clipping into new all-time highs in maybe the next 2, 3, 4 months. You just got to give it a little bit of time, but the fundamentals and their earnings were very strong. Moving on to Netflix right now. So Netflix today down about 1.8%. They're getting the meta treatment, right? This company was just on fire the last few weeks of trade. So it stands to argue that when the market does pull back, they may be one of the companies that pulls back the most. Daily uptrend is very nice at this point, looking for a daily higher low, clipping into the 12 EMA. If you give back any more and engulf and set the daily downtrend, understand what we're trying to do here, trying to reset the weekly higher lows for further trend continuation, which is why I'm not buying Netflix here on this little dip. I'd rather wait maybe for a 970, 950 area retest, same as they've done a few times, right? Retest the 12. If they retest the 12, that could possibly be a swing trade entry. Line that up with the previous resistance, which is now support, and you have a very good area of confluence, 950 to 930 for a little bit of a swing trade on Netflix. Fantastic company, guys. Nothing to say about the valuation either. The valuation is somewhat manageable still at a 1.83 peg at $1,000. Not as expensive as Meta, and they do have record everything in terms of the last quarter. I think this one is very solid. If you're holding any long-term shares, I do not see any red flags to sell. It's just in the short term, it's ran a lot the last month and a half. May just be time for a little bit of an extended pullback, and I will be looking for it if we do come down there 950 to 930. NVIDIA has earnings next Wednesday, so I said in yesterday's video, guys, even though NVIDIA has had a very nice recapture of the daily uptrend, they've reclaimed as well this support zone, which we're now back above. They've reclaimed the daily moving averages too. I would be highly surprised if NVIDIA either breaks this big support to the downside before their earnings or breaks the all-time highs before their earnings as well. I think it's going to be all about those earnings. That being said, the bulls are sitting on a decent amount of space here. Anything above 129, looking for a daily higher low to possibly attack the all-time high region. But like I said, there's literally only like 3 days of trading before their earnings. I don't think they'll break any major levels. I do have a bullish leaning bias on this one leading into earnings. We have probably set the monthly higher lows at this point, and this is the clearest time frame for NVIDIA, in my opinion. Looking for the monthly higher lows, we got them. Maybe now looking for that expansion. I would not be surprised, guys, if NVIDIA raises their guidance this quarter, because all the big tech companies who are NVIDIA's biggest clients all raised their capital expenditure guidance, which Wall Street did not like, but they definitely will like, because that will, for NVIDIA, because that will translate to better NVIDIA revenue guidance overall. Looking quite solid, all things considered, even in terms of the price action. Moving into Tesla right now, Tesla is just continuing to struggle, right? We know they've been struggling. Daily downtrend is real. Looking for a lower high. If we start breaking down here, guys, do not be surprised, right? Even if we set a daily uptrend into resistance, understand up here, big resistance. It was support. Now it will be resistance. That is pretty much 375 up to about 410. Why is it a problem? Look at the weekly time frames, guys. Weekly is still in a weekly downtrend. Just be looking for a lower high. Then it's up to the bulls to reset this in a two-step process. Now, the monthly time frame also shows that the bulls are looking for consolidation, extended monthly consolidation, which is why my favorite area, if they continue this weekly downtrend into lower lows, my favorite area for playing Tesla remains down here, 310 down to about 390. I think it's just a more solid area than the one that we're seeing right now. And I would be looking to position for some swing trades if we come down into there. If we do come into down into there, I'll let you guys know what I'm doing. But most likely, you know me, it will be in the form of short puts. Your 200-day moving average is down there as well. So right now, it's stuck between two levels. Midpoint, right? Overhead resistance and below support. You can argue that these guys are support, but are they really? When you look on the weekly time frame, not so much, right? It's not a clear, as clear as a level as something like here. Let me just actually do it properly, right? 290 all the way down to about 285. That is the more solid area of possible support that you may come down into. Like you can even move it around a little bit, right? But you guys get the gist, right? Lower 300s, 280, 275, this like 10 percent range right there, that's the area that I'd really be looking to shop for more Tesla. I think they ran way too hard. The fundamentals of this one are way, way, way too high for what the company is delivering right now in terms of actual products. Moving into Palantir, and I'm saying that as a Tesla shareholder, by the way. Moving on to Palantir, Palantir was down 10% at one point this morning, but people bought the dip very heavy. I also fired this one off as a trade opportunity. Trade idea setup. Easy wheel play here, guys. When the stock was down 10% this morning, they freed up the $75 to $77 strikes for writing some short puts for 0.5%. Such an easy trade, guys. That was all the way down here. That would have required an additional move down from Palantir. When it was already down 20% in 2 days, that would be an extra 25% in the next week. Can it happen? Sure. But at that point, we'd probably be short-term oversold, and it would be a short-term buying opportunity, in my opinion. That being said, we have now lost the daily higher lows, which are here. So we will see. If the bears want to run down with this one, you'll be looking at lower high into lower low, which would not be the worst case scenario for Palantir here, guys. You would just be looking for what I've been looking for a while, which is a weekly higher low for possible further trend continuation. They could possibly come down all the way, let's say, 80 to back to 81. That would be like worst case scenario for the bulls. All in all, though, now, not looking too bad. But what we've done in just 2 short days, we've cooled off the daily RSI. You can see momentum now, though, is pointing to the downside as well. They've also cooled off a little bit of the weekly timeframes. Still, though, they have not cooled off this egregiously overbought monthly timeframe and these egregiously overpriced fundamentals. And I'm saying that as a Palantir shareholder, guys. I've been taking profits methodically as the stock has blasted through new levels, and I still do not think it's a bad opportunity to take some profits on this stock, which has largely outperformed anybody's fundamental expectations and technical expectations as well. Not a bad opportunity to be writing some covered calls against the position or just trimming the position. And if you want to add back, maybe waiting for a more manageable level of entry closer to some technical levels. And when the fundamentals would still be crazy expensive, but not as expensive as they are at 120, right? Do not chase, guys. Not the best idea. Now, lastly, SOFI. SOFI was down about another 4% on the day. So SOFI's just been kind of struggling the last few days of trade. All in all, though, guys, the daily pattern is still favoring the bulls. We knew it was a daily downturn right here, looking for an engulfing move. Higher lows are set and now possibly looking for a daily higher high formation into a new daily uptrend. They came right down into the expected move today. It was also a good opportunity for some short puts. A few of the members in my group fired it off. We found it very early in the morning. 1450s to 14s were offering some good premium for next week. A few people were able to find that. And now with SOFI up a little bit, those people are now into profit as well. So looking very good. Overall, though, kind of directionless when you look at the higher time frames, right? We're trying to go for this weekly expansion, but all things considered, we are just consolidating within support, $16 to $14. When you're in a consolidation range, the best possible position that you can do if you like the company and you want to buy the company is accumulate via short put options. Think of short puts below the market, 14.5 down to 14. I'm a big fan of writing some options down there in that lower range of support for SOFI, which of course is the prior range of support from 2020 and 2021 alike. Not looking too bad, but still, even on the monthly, guys, what are we doing right now? Just monthly consolidation, looking for higher lows for further trend continuation. So I like this one, $14, $13, $12. If we come down into it, I will be buying. I think SOFI has a very good chance of clipping into the $18 to $20 at a certain point this year. And that is everything for today's video, guys. Hopefully you enjoyed that. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday through Friday. Well, usually when I'm back in Canada, but when I'm traveling now, I'll be doing them Monday to Wednesday. I did them now Tuesday to Thursday because Monday was a holiday this week, of course. Tomorrow, no video from me. The next one will be the Sunday top 5 options play, and the next week, Monday to Wednesday daily market recaps. So keep that in mind. And lastly, if you have any questions whatsoever, guys, feel free to always leave them down below in the comments. Always love helping you guys out with your options, your shares, or your macroeconomic questions whatsoever. Feel free to ask me down below. I'll usually answer within the next 1 to 2 days. And lastly, guys, if you want access to all of the trades, here are all the trades in the Discord that I've made since the inception of the Discord. The green check marks are wins. The little red circles are small losses. I'm always very transparent with my trades. on the channel publicly, you guys know we made 75% in 2023, 65% last year, 2024. And so far this year, the portfolio is up 15, 16%. We're like 3-4x the benchmark SPY and QQQs at this point with just conservative styles, right? A lot of wheel trades, so short put options, but also a lot of call options, call debit spreads, leap call contracts, share swing trades. There's really something for everybody and for all account sizes in the Discord. So if you want access to all these trades, the link, of course, is down below. We also do private morning live streams every morning for about an hour and a half, 2 hours after the open, where I answer your questions and trade live in real time. If you cannot attend them, they are always recorded, of course. And in the event you're not there, you can always ask me questions thereafter in our chat rooms. And I'm usually very happy to answer all of your questions on stocks, options, long-term portfolios, and stuff like that. Anything you want. So if any of that sounds good to you, we also do private videos where I go over high-level strategies that I do not share on YouTube that much. Whether you have a small account or a very, very large 7-figure account, I do have high-level strategies that clients and members have been having very good success. My coaching clients as well have been having very, very, very good success with those private videos too. Also, how to grow small accounts, psychology videos, how to manage wins, how to manage losses, in-depth, detailed covered call guides as well for every single type of scenario you could possibly find. Very good quality content in there, as you guys know. I usually pump out some pretty decent quality content, at least I do think in my opinion. And all my watch lists as well. If you guys want to copy all my watch lists for options trading, for the high conviction lists, for building long-term portfolio lists, anything, and all the technical analysis on these charts, the support, the resistance ranges. Whenever I do any TA, you can copy paste all of these charts with one click of a button. And also it comes with all the annotations from all these earnings that I do here, you guys, where I annotate the charts like this and give the valuations quarter by quarter on like hundreds of different stocks. That all comes with a click of a button as well. You can just copy paste everything and your charts will look exactly like mine. If any of that interests you guys, link is down below. And if not, I guess I will see you back on the channel. That's it for me. That's it for the weekly recap and the rundown. Hopefully you guys enjoyed. That's it. Take care. I will see you guys on Sunday. Have a great rest of your week to close it out. Close it out strong on Friday, guys. And I'll see you guys very soon. Take care and peace.